In this video, we're diving into a question that's been debated for centuries. Should you invest in gold or silver for your retirement?
So, the big question is where to invest after retirement. Let's compare gold and silver for 2025.
Gold just hit a record high above $3,600 per ounce, and silver, it's up nearly 30% this year, sitting at about $38 an ounce. So, which one is the smarter choice for your retirement savings? Let's break it down step by step in simple terms. Now, before we even compare gold and silver, let's ask, why do precious metals matter at all for retirement planning in 2025? Think about what's happening around us. Inflation. It's still higher than normal. On average, global inflation is around 4% in 2025, which means your money buys less over time. The stock market. It goes up, but it can also crash without warning. Just look at the sharp drops we saw in tech stocks earlier this year. And bonds? Yields are better than a few years ago, but they still don't keep up with inflation in many countries. That's where precious metals come in. They don't behave like stocks or bonds. They're like having an umbrella when it rains. They protect you when the economy gets stormy. For retirement, that's super important because you don't want all your hard-earned money tied up in something that could lose half its value overnight. Here's a simple side-by-side picture of gold and silver in 2025. Gold at $3,600 an ounce, that's a record breaker. Silver, meanwhile, trades at about $37 to $38 an ounce, much cheaper per unit, but don't be fooled. It's had nearly a 30% gain just this year. Looking at history, gold has returned an average of about 10.6% a year, while silver has averaged closer to 7.6%. But here's the flip side, volatility. Gold's prices move moderately, about 14 to 15% up or down. Silver, double that, with swings of around 26%. Even the biggest losses in history tell the story. Gold's worst drop was around 25%, while silver once crashed by more than 50%. And finally, industrial demand. Gold has some use in jewelry and electronics, but silver, almost 60% of its demand comes from industries like solar panels, electric vehicles, and medical tech. So gold is the steady elder brother, steady, reliable, respected worldwide. Silver is the younger, energetic sibling, more affordable, with higher growth potential, but also more unpredictable. Gold is often called the ultimate safe haven, and for good reason. Why gold is powerful for retirement. 1. Inflation hedge. When the value of money goes down, gold tends to hold or even gain value. Think of it this way. If a loaf of bread costs more tomorrow, the amount of gold needed to buy it usually stays about the same. Stability. Unlike stocks that can swing wildly, gold doesn't move as dramatically. That's why central banks keep buying it. In fact, in 2024, central banks bought over 1,000 tons of gold, and that buying trend continues into 2025. Liquidity. Gold is recognized everywhere. If you need cash quickly, you can sell it almost instantly in any part of the world. And long track record. For thousands of years, gold has been trusted as a store of value. Empires have collapsed, currencies have disappeared, but gold has always kept its shine. The 2025 price story. Right now, gold is trading above $3,600 an ounce, and many analysts believe it could reach $4,200 or even $4,500 by 2026-27. That's a pretty strong growth outlook for something that's usually known for stability rather than wild gains. For retirees, this stability is priceless. It's like having a rock-solid foundation for your financial house. Now, let's turn to silver. Silver is sometimes unfairly called poor man's gold, but in reality, it's much more exciting. Why? Because it's not just a precious metal, it's also a critical industrial metal. Where is silver used in 2025? Solar panels. Silver is essential in solar cells, and with the push towards renewable energy, demand is skyrocketing. Electric vehicles, EVs. Each EV uses 2 to 3 times more silver than a regular car. And with EV sales projected to hit 18 million units in 2025, that's a huge demand driver. Electronics. Phones, laptops, medical devices, they all need silver. Why silver could explode in value? 1. Industrial demand boom. Over half of silver demand comes from industries unlike gold, which is mostly jewelry or reserves. That industrial link gives silver a strong growth story. Gold to silver ratio. Right now, gold is about 95 times more expensive than silver. Historically, that ratio is closer to 60 to 70. If it reverts, silver has a lot of catching up to do, meaning its price could rise faster than gold. You can buy nearly 100 ounces of silver for the cost of just 1 ounce of gold. For smaller investors, this feels more approachable. And supply deficit. The silver market has been in a supply deficit for 7 straight years. Demand keeps outpacing supply, and when that happens, prices usually go up. The 2025 price story. Silver is currently around $38 an ounce. Some experts believe it could reach $40 to $45 by the end of this year, and bullish predictions go as high as 50 plus by 2026. That's massive growth potential compared to gold. But here's the catch. Silver is more volatile. In bad years, it can fall 50% or more, so it's not for the faint of heart. Okay, so what's the risk with these metals? Gold's risk, it's stable, but it might not grow as fast. Think of it like a slow but steady car that always gets you home safely. Silver's risk, it's fast and powerful, but also risky. It can give you huge returns, but it can also drop sharply. For someone retiring soon, gold feels safer. For someone younger with time to ride out the ups and downs, silver can be exciting. Portfolio strategy, mixing gold and silver. The smartest strategy isn't choosing just one, it's blending them based on your risk comfort. Here are 3 simple allocation ideas for 2025. Conservative, low risk, 8% gold, 5% silver. Moderate, balanced, 8% gold, 15% silver. Aggressive, high growth, 3 to 5% gold, 7 to 10% silver. This way you enjoy the safety of gold and the growth of silver. How to actually invest. So how do you put this into action? You've got a few choices. 1. Physical metals. Coins, bars, or bullion. You own them directly, but you'll need safe storage and maybe even insurance. 2. ETFs. These track gold or silver prices and trade like regular stocks. No need to worry about storage. 3. Mining stocks and mutual funds. Instead of owning the metal, you invest in companies that mine it. These can provide higher returns, but also higher risks. And 4. Gold and silver IRAs. Special retirement accounts where you can hold metals with tax advantages. In 2025, these accounts are becoming really popular with retirees. So, which is better for retirement in 2025? If your main goal is stability and protecting your nest egg, gold is the better option. If you're aiming for growth and are okay with volatility, silver is the better option. But the smartest move? A mix of both. That way, you're not putting all your eggs in one basket. Here's the bottom line. Gold is like your shield, steady, protective, and reliable. Silver is like your rocket, fast, exciting, and full of growth potential. Together, they create balance, safety plus opportunity. In 2025, with gold at record highs and silver on one of its strongest rallies in years, both deserve a place in your retirement portfolio. So when people ask, should I invest in gold or silver? The answer is, it depends on your goals, risk tolerance, and timeline, but for retirement, having some of both is usually the best strategy. Are you team gold, team silver, or team both? Here's to a retirement that's not just safe, but also shining bright.